Hello and welcome to Trade of the Week for the week starting Monday the 6th of February. Last week was a frustrating one. We were looking for longs in euro dollar and we were waiting for an activation which came on the breakthrough resistance. So here's exactly how things were looking. We were in consolidation mode, set within a bullish trend. We did see the breakthrough resistance here to activate that trade. And then we were looking for a little pop into 110.40. We came into 110.34. So we came within a whisker of that level and then saw a big collapse at the back end of last week. And we saw this market heading heavily lower, breaking down through support this morning. And therefore, unfortunately, this trade has not necessarily worked out how we were hoping it would, but came very close to that take profit. Last week hasn't necessarily done us any favors for the rest of our trades either. None of them have been stopped out apart from this euro dollar trade. Firstly, we'll look at dollar yen. Bearing in mind, we've got a stop up here around about 135. We're looking for continuation of this trend. We've now broken through this descending trend line. That's certainly a warning sign. Up ahead, we do have the 76.4 Fibonacci level, which is at 133 essentially. So look out for how it responds to that. But certainly the idea here is inflation in the US continues to move down. We're moving towards a phase where terminal rate is reached over in the US, and then they start talking about cutting rates soon enough. Meanwhile, Japanese inflation moves higher and they start talking about potentially having to do something. But certainly that payrolls figure on Friday put the cat amongst the pigeons when thinking about how long they might want to raise rates and keep them higher over at the Federal Reserve. And then looking at aluminium, that was one that we've got from Axel. Now looks like it's topped out, quite frankly. We've broken down through support at 2555. This points towards a wider retracement. The stop loss is some way away anyway, so he's taking a longer term view on it anyway. But certainly I would say over the near term, there's definitely a risk of us coming off once again. But certainly the wider trend here does still remain bullish. And then looking at dollar CAD rebounding, set within this bearish trend, but certainly the risk here is if we break through 134.71. So as things stand, we still do remain within this bearish trend, but the back end of last week did start to see this reverse. Looking for the week ahead, this week I wanted to look at natural gas. It's been a consistent underperformer, and if you look at the performance of this market over the course of recent months, we can see that it has been very consistently moving lower and crucially creating these lower swing highs all the way down. This has been consistent. Let's hope it's consistent once again. So we're looking for a short here in natural gas, placing our stop above this recent swing high, which is at 26.08, as you can see here. So I'm going to put my stop at 26.30, and towards the downside we're looking for a target of 22.32. That's for a by and large 1-for-1 trade for a continuation of this short natural gas move.